We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Professor Steve Hanke, otherwise known as the Money Doctor. He's an applied professor of economics at Johns Hopkins. How are you today, Steve?
Great, Tom. How about you?
I'm excellent. I'm really looking forward to this conversation, obviously because of your real role with the let's say the dollarization that is in progress in Argentina here with the election of President. Is it Milei?
Yes, President Javier Milei.
Okay, Milei. So, this is an interesting case study for what it means for the country going forward here. So I thought we could kind of start by talking a little bit about the history of it. I went through the working paper that you co-authored, and I pulled some bits from it here. So I'll just read some of that, and we can kind of go through some of the history. So in 1999, at President Menem's request, Hanke and Kurt Schuler drafted a dollarization law for Argentina. So when we think about that, why is it that didn't end up going through in 1999?
Well, the main reason, let's go back to actually a little before that. Maybe think of the main reason it didn't go through in 1999 is that Menem calculated and figured out he didn't have the votes to do it. But if we go back 10 years before that, that's when I first started advising President Carlos Menem. First time Mrs. Hanke and I met him. And at that time, they had triple-digit inflation. Menem had just been elected. He wanted to liberalize the economy more or less along the same lines as Chicago boys had liberalized Chile. And Menem wasn't getting any place. Asked me what I thought about the whole thing since I'd been involved in Chile and the reforms in Chile. And I said, look, I said, you won the election, but you really don't have any credibility, that people don't believe that you can actually do these reforms, and they don't believe you because you've got this raging inflation you can't get under control. So he said, well, what would you do about that? And I said, what you should do is install a currency board. I explained what that was, and he said, well, could you write this up? And, let's do it. Did write that up. Co-authored a book with Kurt Schuler that was published in Buenos Aires, in which we proposed an orthodox currency board in which the Argentine peso would be linked to the U.S. dollar. It would trade at a fixed exchange rate with the U.S. dollar, freely trade, be perfectly convertible, and it would be credible because the reserves required to back the pesos that were issued to be 100%. So the peso would really be just a clone of the U.S. dollar. In April, so we published our book early in 1991. It was written, a foreword was written by a prominent congressman at the time. And the thing was in gear. They adopted eventually in April of 1991 what they called a convertibility system. And it looked a little bit like a currency board. In fact, most people thought it was a currency board, but it allowed for a lot of discretion and monetary policy. And you can't have that. With a currency board, you have an exchange rate policy. The exchange rate's fixed, but you have no monetary policy at all. Monetary policy is on autopilot. And what the convertibility system allowed for was a lot of discretion. So right away, after they introduced the system, I wrote an article in the Wall Street Journal, and I said, what they really have to do is get rid of the central bank. So as far as I know, that's the first proposal to actually get rid of the central bank. And of course, that didn't happen. And I warned that if they didn't get rid of the central bank and didn't get rid of the discretion associated with the convertibility law, that the thing would eventually blow up. Did in 2001. So that's one aspect. Another aspect is 1995, the tequila crisis. That's when the Mexican peso blew up. That hit all of Latin America, including Argentina. Argentina was operating under convertibility then, and I became the chief advisor to Domingo Cavallo, who was the Minister of Economy, and my role was to simply explain how convertibility worked, and then it probably would be safe, and people shouldn't be worried about the so-called tequila effect. The other thing, at that time, I was the president of Toronto Trust Argentina, which was a mutual fund, and it turned out 1995 we were the best performing fund in the world. Fast forward to 1999, that's when Menem asked me again, we're in another crisis, and the convertibility system was becoming under pressure. What should we do? And I said, I think you should dollarize. And that's when the draft law was drafted. And as I say, ultimately, I think the president, Menem, just thought that he didn't have the votes to pull it off. So if they would have done it, by the way, none of the crises they've been in since 1999 would occur. Since 2000, they've defaulted 3 times on their sovereign debt. I mean, it's just been one currency crisis, one banking crisis after another, starting at the end of the convertibility system in 2001. So that's kind of a little snapshot of the thing. And today, I measured inflation in Argentina. It's 220% a year. So they're right back to where they were in 1989 when I first met Menem.
It's crazy to think about the actual measured inflation there, as well as, I think that kind of frames this time perfectly for those that aren't familiar with the history there. Going back to the abstract of the paper you wrote, I think also puts it excellently. Over many decades, the stability and value of the Argentine peso has been repeatedly undermined by the successive governments in Buenos Aires, who have relied on the monetary powers of the Argentine central bank to fund their budget deficits. This has led to persistently rapid, broad money growth, high inflation, and a chronically weak currency. To end the abuse of the central bank, we propose abolishing the BCRA, the central bank, and dollarizing the economy. So, Steve, do you think are the major obstacles in implementing the dollar here?
Well, there really aren't any. Now, most economists that analyze this thing, they look at the balance sheet of the central bank, and they think that you have to convert every liability on the balance sheet into dollars, and to do that, you would have to have dollar reserves equal to the size of the liabilities that you have. And if you do that kind of arithmetic, which is totally stupid and done by economists who have never done a dollarization, they don't know what they're doing. Now, as it turns out, I actually have done this twice. Once in Montenegro in 1999, when we dollarized Montenegro. Now, by doing that, what happened is that we got rid of the hyperinflating Yugoslav dinar and replaced it with a German mark. So that's dollarization in quotes, that we did. And then in 2000, and I was the architect of that, and was President Djukanovic's chief advisor and a state counselor in Montenegro. Then we go to Ecuador. In 2001, I was the advisor of the Minister of Economy, and they got rid of the junk currency they had, the sucre, and they replaced it with the dollar. They dollarized. So what the experts do, they look at these balance sheets and they say, you got to convert all the liabilities on the balance sheet into U.S. dollars. You have to have foreign exchange in U.S. dollars to cover those liabilities. No. The only thing that you have to have is enough dollars in foreign exchange to convert the currency, the peso notes that you have outstanding. Mm-hmm. The other things are converted at whatever exchange rate you determine you're going to convert them at, just with a stroke of a pen. You just change the unit of account from pesos to dollars at the new exchange rate. So even if we use the official exchange rate of around 350 pesos to the dollar, you would have plenty of dollar foreign reserves to convert the pesos that are liabilities of the central bank. So it's feasible. It's easy to do. Most economists say, oh, this isn't feasible. $40 billion to actually do the conversion, but they're converting the wrong thing. They're including the whole balance sheet, which most of it you can convert with a stroke of a pen. Mm-hmm. So they get that wrong. And then they also get another thing wrong. And that is, well, what should the exchange rate be that you convert? That's the big question. The official rate, as I say, is about 350. The black market rate today is about 1,000 to 1. If you calculate on a purchasing power parity basis, you end up with something like around 500. And there are other ways to technically calculate, do bench calculations of what an equilibrium exchange rate should be. And they all come in more or less around 500. So here's how I did the conversion in Bulgaria when I established a currency board. We said we would announce we're going to dollarize. And at that time, you would freeze the monetary base of the central bank and you'd let the currency float. In this case, the peso dollar rate would float for 30 days. And then you'd look at the rate, see what the market was, and it would probably be somewhere in between the black market rate and the official rate, more or less along the lines of what you get with these purchasing power parity and other economic modeling exercises. And you set the rate. And of course, that rate would mean that you need fewer dollars in reserves to convert than the artificial 350 pesos to the dollar rate. So the whole thing, the economists really look pretty stupid, for lack of another word. I mean, they literally don't know what they're doing. And there are none of them that have ever done a dollarization, by the way. All these bright boys and girls have never been in the trenches and had to actually do one of these things before. So that's one reason they get fouled up with the calculations. So it's not only desirable to dollarize, but it's feasible. You said, well, what are the problems? There aren't any problems. You just do it.
And if I'm not mistaken, Argentina has one of the largest dollar reserves outside the U.S., right?
Oh, right next to the U.S. It's the largest stock of dollar cash outside the United States. It's in Argentina. Once you dollarize, all those dollars in the safety deposit boxes and under the mattress, those would go into the banking system. They would come out of hiding, kind of, and they would go into the financial system. Mm-hmm. So the point here is that de facto, Argentina is already dollarized. It's spontaneously dollarized anyway. Mm-hmm. The most important part of the monetary picture in Argentina, it's U.S. dollars.
So, that being considered, Steve, is there, really not choice for the government to really do the dollarization? Would this happen spontaneously, as it were, anyway?
Well, it has happened spontaneously. Mm-hmm. And the reason that it's happened is pretty clear. Since Fernandez has become president in December of 2019, the peso has lost about 95% of its value against the U.S. dollar. So that's why everybody gets rid of their pesos like a hot potato.
So what about backing the peso to gold? Would that not create the monetary discipline in the government that the population is after, that would create that stability?
You could do that, and I have. You could have a currency board kind of arrangement in which you issued a gold-backed peso. The peso would be backed with 100% gold reserves, and it would trade at a fixed exchange rate, the peso to gold, to so many ounces of gold. So that would be a gold-backed currency board, and you'd have the peso would be a clone of gold then.
Mm-hmm. But is it then
more realistic in a place like Turkey or Iran or Russia than it is in Argentina? Argentina, they already use the dollar. I mean, the place is dollarized anyway.
I was going to say, it seems like facilitates trade easier to dollarize instead of go to a gold back.
You're probably right. It would, if you had a gold backed currency, do your trading, it would increase the transactions cost a little bit, not very much, but a little bit. The main thing you want to do, just like we did in Montenegro, what was the currency everybody had under the mattress? Deutschmarks. Everyone had Deutschmarks. You couldn't buy a car without Deutschmarks. You couldn't buy a house without Deutschmarks. You couldn't buy a washing machine without Deutschmarks. And you more or less had the same thing in Ecuador when they dollarized. Everyone is using the dollar. And Argentina, big time. So you go with people have already made their choice. The Argentines prefer dollars to pesos or euros or anything else, or gold, or cryptos, you name it. The dollar is king in Argentina, and it has been for a long time.
So would there be also a consideration around how much gold Argentina actually holds? I looked up before the show here that Argentina only holds about 61.7 tons of gold in the central bank. Is that also, somewhat of an obstacle?
Well, no, because they also have dollars. They have value of dollars and reserves is a lot higher than gold. I think it's about 6 times higher or 5 times higher or something like that. So again, could do a gold-backed currency board. Honestly, I wouldn't recommend it in Argentina. Just
again, because everybody's already holding dollars.
Everybody's already holding dollars, or more dollars there than they know what to do with. It's kind of a no-brainer. So why invent some artificial thing that somebody's dreaming up in a classroom or something?
And that also kind of is the same explanation for why not setting it to Bitcoin like El Salvador, right?
Yeah, well, El Salvador has made Bitcoin legal tender, but it's forced tender. That's a country that dollarized in 2002. So they no longer have a local currency. The currency they use is the U.S. dollar. It's worked very well. Lowest inflation rate over the last 20 years of any country in Latin America has been El Salvador. But the president just got on this Bitcoin kick, and he made Bitcoin legal tender also. But in fact, the way the law is written, it's forced tender. You're forced to use it, but no one wants to. Very few people use it. It's again an artificial construct that's been forced on people in El Salvador, where the president's tried to force them, but he hasn't been very successful with it.
So, Steve, what are the coinage considerations going forward from here? Does Argentina have to mint new coins that are dollar based? How does that work?
Well, they will have to have some kind of small provision for small change. And the easiest way to do that is to have a currency board kind of arrangement for small change in Argentine dollar denominated change. So they would have to have 100% reserve backing for all the coins that they mint that were denominated in US dollars. And they would obviously trade at a 1-to-1 exchange rate. That's how you would do it. Otherwise, they would have to import all the coins from the United States.
Mm-hmm. What effect is this going to have over inflation and interest rates in the country?
Well, the inflation rate would collapse overnight. Interest rates would also approach those of the United States, adjusted for any risk considerations. And you would, the big thing you would get is what you got in Ecuador and El Salvador right away. You'd get long-term credit. You can't get long-term credit really in pesos. So like a mortgage, a 30-year mortgage or 20-year mortgage, forget it. You would be able to do that if they dollarized. So the inflation tax would disappear, and you would see long-term credit being offered.
So are there other examples of the success of a dollarization, let's say like Panama or Hong Kong, that we could compare or get clues as to a future path for Argentina?
Well, number one, Panama is dollarized, and it's been dollarized for over 100 years, but in Latin America, and Hong Kong is not dollarized. It's got a currency board. So the Hong Kong dollar is a clone of the US dollar because it trades at 7.8 Hong Kong for 1 US, but the Hong Kong dollar is backed 100% with US dollar reserves. Mm-hmm. So if you don't like your Hong Kong dollars, you take them in and exchange them for US dollars and with no problem. And they've had that system since 1983. There are actually 33 countries and jurisdictions that don't have a local currency. That means they're dollarized. I mentioned Montenegro. Someplace, Liechtenstein, for example, it uses the Swiss franc. So there are various places, 33 in total. And they were all have been very successful. They work fine.
So is this really just relative, let's say, adoption of the US's monetary policy, inflation rates, and interest rates? And do they basically end up giving that away to the US central bank?
Well, yeah, fortunately, that's exactly what happened. A lot of people make academic kind of arguments that this is a bad thing, but if you look at the history of Argentina, you've got the following with the central bank. You've got one currency crisis after another. You've got a lot of recessions from 1950 to 2023. You've had 16 recessions in Argentina. I already mentioned they're a debt deadbeat. They've had 3 sovereign defaults since 2000. They're a recidivist. They've been in critical care, being taken care of by the IMF, 22 programs since 1956. So you've got, if you keep the peso, you're going to continue on that same path. If you do the dollar, you're going to have U.S. dollar and U.S. Fed monetary policy, which is going to certainly be an improvement over what they've had. It's kind of a no-brainer. I mean, the trouble with these kind of classroom exercises that you see thrown up, journalists use them all the time. What I call the nirvana approach to analysis. They assume that a central bank is going to operate perfectly smooth, no banking crises, no currency crises. By the way, you can't have a currency crisis if you're dollarized. There's no exchange rate with a dollar. You're using the dollar. You don't have exchange rate crises in New York and in California and so forth. You get rid of those, you get rid of the banking crisis, you reduce the number of recessions dramatically, and you get stability. And stability might not be everything, but everything is nothing without stability.
Mm-hmm. Yeah, I remember reading that in the abstract or in the paper, and I like that. It's an interesting line.
That great line, but the truth is that you can't clean up any of the mess any place, and they've got plenty of them in Argentina, unless you have stability. If you have an unstable ball, if you're in the middle of a crisis, it's very hard to do anything that makes much sense except to try to save your skin in the middle of a crisis.
So, Steve, does this end up creating more demand for Argentinian goods, considering, let's say, the seamlessness of transacting for other countries that already hold dollars?
Yes, but and it would help Argentina in the sense that a lot of their exports actually are denominated, invoiced in dollars anyway. Mm-hmm. So that part, all their agricultural output basically is priced in dollars anyway. Mm-hmm. It really wouldn't change that, but it would help agriculture in Argentina because now they have number one, they have taxes on exports of agriculture, and they have restrictions on exporting agriculture. The reason they do this is because of the the peso, the unstable peso.
Mm-hmm.
So with a stable dollar, they would be able to eliminate those restrictions, which would help the agricultural sector enormously. And it would help direct foreign investment enormously, because now if you're investing in Argentina, you got to think twice, because you got to think, number one, where is the peso going? And number two, am I going to be locked into some kind of capital controls that they impose to try to protect the peso?
Mm-hmm.
And I won't be able to get my money out.
So, Steve, does this create, considering that they're, let's say, halfway or whatever number you want to put on that, they're already, a ways down the path of dollarizing without being officially, dollarized. Does this create more demand for the USD?
Yes, a little bit, but
so
it's not going to. Would be a foot in some report, United States.
So, that being considered, there's probably not going to need to be a special meeting with the Federal Reserve.
Well, no, there wouldn't be anyway, because when we dollarized Ecuador, there was no special meeting. No one in the United States had to approve it. When they did El Salvador the next year in 2002, there was no special meeting or anything. And by the way, when you think about it, countries are dollarizing all the time, spontaneously, and there's no special meeting for it. By the way, it's very good business for the United States, because they're issuing the greenbacks that cost almost nothing to print, and they're getting $1 in exchange. It's pretty good business.
Steve, what will let's say the commercial banks in Argentina have to do in order to meet reserve requirements now?
Oh, with the stroke of a pen, it's done. That's on that's the balance sheet thing I was talking about. You're just changing the unit of account at whatever the fixed exchange rate is that you decide the conversion is going to occur at. So that's a non-issue. The peso reserves become dollar reserves at the conversion rate.
So, considering that they're switching completely over to the dollar, let's say, is there any need for a sovereign bond or treasury market the way that we understand it in the US?
Well, yeah, there would be, but the sovereign bonds would be issued dollars.
Okay.
I mean, they wouldn't be borrowing pesos anymore. All borrowing, whether it be domestic borrowing or foreign, would be denominated. Well, a foreign could be denominated in any currency, but the peso wouldn't be one of them, because the Argentine peso wouldn't exist anymore.
Mm-hmm. So, Steve, does this better align Argentina to the US, or would there be maybe an advantage to align themselves to the BRICS countries by, say, adopting the yuan?
Well, why would you want to adopt the yuan? I mean, it isn't even convertible. So it's basically, it's kind of a hypothetical conversation you would have in a seminar at a university or something, but realistically, it's just irrelevant.
Mm-hmm. So who, if anybody in your mind, would be opposed to this?
Well, Argentine politicians, because it means no longer have a central bank that loans them credit all the time, and a central bank who robs the public and transfers the money to the government. That's the crowd that's against it primarily are the political class.
So, once the people, let's say, see the difference in the effect on their currency, their inflation rate, their purchasing power, won't they also become staunch supporters of the upkeep of a properly run budget?
Yeah. Oh, yes. The first thing that it does generate a big confidence shock. And the voters seem to be inclined to want the politicians to be put in straitjackets anyway. I mean, that's what the dollarized system does. It puts the politicians in straitjackets, and they don't like that. Mm-hmm. They'd rather spend freely, go to the central bank and say, print some more pesos, extend some credit to us, bail us out. And what happens is that the central bank creates too many pesos, you get a big inflation tax, and who really gets screwed in the process? We're now fashionable, we have to talk about equity. Well, the inflation tax is the most regressive tax you can dream up. It hits the poor because the poor are spending all their money. They're living on subsistence. And that means every time they're spending, they're getting hit with inflation tax. Every single peso they spend is being taxed with the inflation tax. The rich are not in that situation because they're not spending all their money. So they're not confronting the inflation tax with every single peso they're spending.
Excellent, Steve. Well, that's a good portion of what I wanted to talk to you today about. Is there anything else, maybe off the top of your head, that you'd like to share with our audience before we wrap up?
Well, not really, Tom. I think we've covered it.
Absolutely. Of course, Steve.
They can make certain that people know how they can follow me on Twitter and how they can contact me if they want to be on my distribution list, Tom.
Absolutely. That's what I just wanted to go over on Twitter at Steve_Hanke, Hanke. And you also do kind of a mailing list to send out your articles and keep people up to date with. Give us your email if people want to sign up for that.
Yeah, the email, my last name, Hanke, Hanke, at jhu.edu.
Perfect. Of course, we'll have all of this in the show notes as well. Steve, I really appreciate you sharing a little bit of your time with us today, walking us through this interesting development in the world.
Thank you, Tom, for having me. Good to be with you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.